Hey guys, so in today's video I'm going to be doing an in-depth analysis of Disney stock. The symbol for Disney stock is DIS. And if you're new to this channel, I make videos on the stock market and investing, so if you're interested in that, consider subscribing, and let's get right into the video. So Disney has four main business segments. They have media networks, movies, parks and resorts, and then consumer goods. The main three are the parks and resorts, media networks, and movies, so I'm going to go into those three in depth more. So in the most recent quarter, they struggled significantly with their media networks and their movies, and then their parks and resorts was the bright spot of their most recent earnings report, and it showed strong growth. Their media networks, which has ESPN, ABC, and Disney Channel, was down significantly. ESPN is losing subscribers, and that is definitely a struggle for them. ESPN has been struggling since 2015, and Disney stock has been pretty much flat since 2015. And then the parks and resort segment was definitely the bright spot of their most recent earnings report. All of Disney's parks have been doing well. They recently opened a park in Shanghai that's been doing very well, and so this segment of their business is going flawlessly. They are executing many new park openings, and they're all going well, so I don't see any problems in the future with this segment of their business, and so that's definitely good that they have one part of their business that has double-digit growth and is going to, in my opinion, remain strong for the foreseeable future. Disney is continuing to expand new projects. They have a Star Wars hotel that they're working on, they're building 3 new cruise ships, and they have much more in this segment of their business. So I think that parks and resorts is going to continue growing at the rapid rate that it has been recently, and so this will definitely be beneficial for Disney. They also have their movie studio, which didn't perform very well last quarter and was down year over year. But in the conference call, they talked about how this was just due to them not having that many large movies that were big hits during this most recent quarter, and I tend to agree with them. They also said that they have a lot of strong movies coming out over the next year or so, and I agree with this as well. They have another Star Wars movie coming out, they have an Avengers movie coming out, they have Incredibles 2, and they have Wreck-It Ralph 2, and so all of these movies I think will pick up the studio segment, and so I'm not concerned about that at all. And then into the media network segment, which has ESPN and ABC. That I'm more concerned about, but not overly concerned. So I think that that segment of their business is going to continue to struggle for the next few years. However, in 2019, Disney announced that they're going to be switching away from having their products on Netflix, and instead they're going to operate their own streaming service. They acquired a majority stake in BAMTech, and they will be using this platform to get all of their content out. And so this is a move Disney should have made a long time ago. Better late than never, so I'm glad that they are finally doing this, but this way they will have the money from operating the streaming service as well as from having all of the content, and so I think this is what is going to fix their struggles with their media networks, and so I think they're definitely in a transition period over the next few years, but that they will return to fast growth like they have had in the past after they have this new streaming service come out and correct the ESPN part of their business. And I do think that Disney leaving Netflix will definitely be difficult for Netflix because they're losing one of their main content providers, but I think, like I said, it will be great for Disney in the long run. They will be able to profit off of the streaming and off of the content, and I think that they will be able to attract a lot of customers. They have enough content to be able to start their own streaming platform, and this will be a large area of growth for them in the future. And like I said, I think it will fix their ESPN problems. I think it will offer a great place for them to deliver all of their content, and I think it will definitely hurt Netflix. It'll be interesting to see what happens to Netflix after losing Disney, but I think this is definitely the right decision for Disney. And I think that parks and resorts will continue to grow. I'm not concerned about movies. And so, like I said, transition period for the next year or two, and then after that, they will return to strong growth. And so Disney is a great business because they have so many strong brands. I think it would be hard to find another company that has more brands that have instant name recognition. Some of the strong brands owned by Disney include Pixar, Lucasfilms, Marvel Entertainment, Touchstone Pictures, American Broadcasting Company or ABC, Hollywood Records, ESPN, A&E, which is a TV channel, Lifetime, the History Channel, and Maker Studios. So as you can see, these are some massive brands that Disney owns. And so they have the strongest brands of any company, I think, and this is definitely going to be key to continuing their growth. And I also think that a good thing about a lot of the brands they have is Star Wars will continue to sell for the foreseeable future. A lot of the Marvel movies will likely continue to sell for the foreseeable future. So even though they won't be producing new movies for that segment, with their own streaming platform, those movies will likely continue to be viewed on that streaming platform and will continue to add value. And then on a valuation standpoint, Disney is trading at 18 times earnings and 15 times forward earnings. This is definitely a very reasonable valuation on the company. They are going through a bit of a transition period, so the growth will likely be minimal for the next few years, but after that the growth will pick back up. And so a 15 forward price to earnings and an 18 price to earnings is significantly below the S&P 500, which has a price to earnings in the mid-20s right now. I also think that Disney could potentially be an acquisition target. Apple said that they are going to be moving into streaming and content providing, and Apple has $280 billion in cash. Disney has a $180 billion market cap and is probably the strongest content company of any of the companies around. And so I could see Apple definitely looking to acquire Disney because they have all that cash that is just sitting there, and this would jumpstart their content business. I'm not sure if it will actually happen. This is more of speculation, but I think it is definitely a possibility. Disney also has a solid dividend in the mid 1% range. This is a dividend that is similar to a company like Nike. And they have this dividend because they don't want to have a super high dividend because they're focusing on growth. And so a large dividend will stifle growth. So I'm definitely happy with this dividend. It seems like it is kind of the perfect amount right now where it's not hindering growth at all, but shareholders are still getting paid and you can reinvest your dividends. They also have a strong balance sheet with low debt, which means that I don't think they'll have any problems rolling out their own streaming services. So that is definitely another plus for them. For the ESPN part of their business, like I said, it has been struggling quite a bit, but ESPN is the main network where people watch sports. So I think that ESPN will be fine. I think that they are suffering from less people using cable, more people switching to streaming services, as well as just some internal problems with ESPN. But ESPN has so much college football and so many other sports that I think they will be completely fine in the future. And as Disney rolls out their own streaming platform, this will correct ESPN's struggles. In the end, I think content is king, and Disney is the best content provider out there. This makes them an acquisition target for Apple potentially, or maybe a merger with a telecom, but I think this is very unlikely. And I also don't think the acquisition by Apple is super likely. I think it is definitely a pretty low chance of that happening, but it's definitely a possibility. And then Disney also has strong growth from parks. They will correct the issues with studios by having new good movies come out. They will correct their issues with ESPN by switching to their own streaming service, which will benefit them significantly in the long run as well. And parks and resorts will continue to perform very well and be the bright spot of their business. They have a strong balance sheet. They're trading at an attractive valuation, and they are a great company all in all with tremendous brands and strong brand recognition. So I think all in all, they will be in a transition period for the next couple years, but that in the future, in the long run, they will fix all of the problems that their business is currently going through and continue to grow significantly and create great capital appreciation for their investors.
Even though I think Disney will have no problem continuing their growth, there are a few risks involved in investing in Disney stock. So the first risk would be that parks and resorts growth slows. This has been the bright spot of their company in the most recent quarter, and if growth slows here, it will definitely have a negative impact on the future. The next area of risk would be if ESPN never has a turnaround, if it continues to lose subscribers and the earnings continue to fall, and their recent acquisition of BAMTech and creating their own streaming service does nothing to help ESPN. And then the final risk that I see is if their upcoming movies flop. I don't think this is likely. They have a long history of producing successful movies, but you never know with content. It is completely possible that one of their new movies will absolutely suck, and it won't generate anywhere near the revenue that they were expecting. Thank you guys for watching. I hope you enjoyed this analysis of Disney stock. The symbol again for them is DIS. Comment down below what your opinions on Disney are. Do you think they will be able to turn around their media segments? And do you think they will be able to continue growing parks and resorts at such a fast rate? Thank you guys for watching. If you are not subscribed already, consider subscribing. I make lots of videos on investing in the stock market. And also, if you enjoyed the video, leave a like down below.